Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at the market rundown heading into Tuesday, January 24th, starting with the S&P 500, yet another day where we dip below the middle Bollinger Band and close right at it. The bulls keep buying the dip. It will be a change in the pattern when we see a close near the low of the day without a recovery. You can see every bearish day that we've had in the past 2 weeks has had a decent lower wick with the bulls buying the dip. Last time we had a day that did not was back on January 9th. So literally 2 weeks with the dip being bought by the bulls every time, and still a battle for this middle Bollinger Band. So keeping an eye out for a weak close that will indicate some continuation to the downside, but until that happens, we know we're just one bullish day away from turning things around and heading back towards the all-time high because we're so close to that level. So we bounced off the middle Bollinger Band. We rejected from 2279. We bounced again and rejected from 2277. Now we'll see if the bulls can set a higher high above 2277 after this bounce, and that would be a bullish break of this trend. Otherwise, we're still watching this range tighten and still being very patient. We did get a bearish break below the low of last week. Certainly not convincing, less than $2. And with only one trading day in this week so far, we need to wait for a little bit more data on this weekly chart. But if we see a weak day tomorrow and a close down near the 2250s, then we will look at that as a bearish break of the inside candlestick, and we will be looking for further pullback. So here we are, still in the same scenario, patiently waiting for conviction and direction. And we do have some hourly moving average resistances to be watching tomorrow. If you check out the SPY video, I highlighted those, and that's going to be very important because if we don't see follow through by the bulls tomorrow, we're certainly going to start looking more significantly at the bears if we don't see any bullish follow through from this bounce. So IWM is very clearly the weakest of the markets. Another lower low hit. We did hold that 50-day moving average support of 133.58. But if we close below that level, we're looking at the gap fill at 130.93. Middle Bollinger Band resistance, we haven't even back tested that level and touched it in the past 5 days. So if we do see some bullish upside, we're in a range between that middle Bollinger Band resistance and the 50-day moving average support. And keep an eye on IWM, because if we see a break of this 50-day moving average and a more significant move to the downside, that can be taken as a clue that perhaps the S&P 500 is going to see that downside a bit more magnified and going to lose that middle Bollinger Band support. Weekly time frame, keep an eye on the 4 period and the 8 period along with the MACD for a potential TCG bear cross, which has not happened since right back before the election. That would be significant, and we would be looking down at 129.75, the low of the last consolidation, if we were to see that bear cross follow through. QQQ, bulls very strong. New all-time high happened on Friday, and the bulls bought the dip in a very strong way today, closing up near the high. All-time high is 123.83, and we're currently less than 50 cents away from that level. Saw a lot of strong tech names. Facebook was strong, And then we saw a lot of pretty much, if you saw the bull video, the bull flag video that I did last week, and if you didn't check it out, it's in the on my YouTube channel. It's under the playlist for lessons. But every bull flag pattern is seeing really big follow through. Google was huge today. And if that remains the case, if tech remains strong, we're going to see QQQ continue to hit all-time highs. So again, the same ranking of the three, QQQ the strongest, S&P 500 in the middle, and IWM the weakest. And you can see this weekly time frame for QQQ. Upper Bollinger Band resistance is 123.89, and the high of today, 123.53. So bulls just trying to continue to form higher lows. We do have that weekly upper Bollinger Band resistance to keep an eye on, which is right near that all-time high. So bulls would have to break out to see some nice continuation throughout this week if we keep hitting all-time highs. But keep an eye on IWM and compare to potentially getting some clues to the S&P 500, because right now we don't have a clear direction and we don't have conviction. And I've been saying that the same thing. I know it's probably repetitive at this point, but until that breaks, lots of back and forth. Certainly wouldn't be comfortable swinging anything. Of course, there's some individual names with some more clear trends, but want some conviction in the market like we had here at the end of 2016. So we'll check back in tomorrow and see if ideal scenario for the bears tomorrow would be to reject from the hourly 20-period resistance first thing in the morning for the S&P 500 and for SPY, and then to hit lower lows compared to today. So we'll be keeping an eye out, and we'll check back in tomorrow. See you then.